Welcome everyone to today's CSIA Wednesday webinar series. My name is Colin Hammond and I will be your host today. From its start, CSIA was built on the principle of collaboration and with the goal to advance the industry of control system integration. In times of crisis, our members have turned to CSIA community as a trusted source for advice and inspiration. In line with this, we have begun this Wednesday webinar series. Our goal is to help our community manage, survive, and hopefully thrive from our current crisis. We plan to cover a wide range of topics on coping and or leveraging the current situation and have SIs, vendor partners, and special guests present. For those of you who are unfamiliar with CSIA, we are a global nonprofit professional association with over 500 member companies in 40 countries. Our mission is to advance the practice of control system integration to benefit our members and their clients. Our vision is to ensure that manufacturing and process industries everywhere have access to low risk, safe, and successful application of automation technology. CSIA membership offers members access to resources needed to attain and exceed business goals. To highlight just a few of our many member benefits, the CSIA Best Practices Manual guides control system integration companies in the setup and running of a solid company. CSIA's Business Insurance Program offers members an excellent insurance program for business owners, subcontractors, and more. The program includes members from all over the world enjoying the peace of mind that comes with CSIA insurance. Clients in all industries are now seeking integrators with a CSIA certification alongside ISO. They recognize CSIA certified integrators' commitment to industry standards and business acumen. As a result, being certified can shorten the sales cycle. CSIA Industrial Automation Exchange is the premier automation guide featuring system integrators and suppliers who provide industrial, manufacturing, and process automation solutions. For integrators and suppliers, it's a place to market their expertise. Clients will find white papers, case studies, capabilities, contact information, and engage in conversation directly with CSIA members. Please follow CSIA's online events calendar for all upcoming webinars, including both partner webinars and business webinars and Wednesday webinars. CSIA's business webinars features topics handpicked by CSIA leadership to help you run your business. CSIA's partner webinars are opportunities given to CSIA's industry partners to address hot topics and demonstrate their expertise. You won't want to miss these opportunities to learn from the comfort of your own office or home. And for more information about CSIA, please visit our website or contact us at info@staff.controlsys.org or give us a call at 847-686-2245. And at this time, I would like to introduce our presenters. Brian is a manager in the firm's System Integrators practice, focused on research and experimentation tax credits. Brian joined Clayton McKervey after a dozen years working as a mechanical engineer. As a CPA, Brian has the opportunity to use his background in systems and processes on a regular basis to help growth-driven system integrators compete in the marketplace. Tim works with closely held businesses, providing high-level tax, accounting, and consulting services to business owners. As practice leader for Clayton McKervey Industrial Automation sector, Tim is particularly attuned to the needs of growth-driven businesses in manufacturing, system integration, distribution, and service-related industries. And with that, I will now pass this over to our presenters. Welcome, Brian. Welcome, Tim.
Great, thanks, Colin. As Brian's pulling up the presentation, just wanted to go over the agenda quickly with you. We'll kind of give you just a brief introduction, a little bit more than what Colin just did. Kind of where we are now. You know, everybody's talked about the PPP loans, payroll tax deferrals, but what other options are out there now? And then where do we go from here? So I think we got some opportunities that we want to present to look at different things that we're hearing from the system integrator community. So just a little introduction, a little bit more on Clayton McKervey. So we're a full service public accounting firm that focuses on adding value to entrepreneurs and their businesses. We've been around for almost 70 years, and I've only been there for 20. I mean, I know I have a lot of gray hair and different things, so some people might think I might be there for 70, but I've only been in this at Clayton McKervey for about 20 years and in the profession for about 25. Over the years, we've evolved, and really over the last 5 years, we found kind of got introduced to the system integration community, and now we've kind of deemed it industrial automation, but really trying to gain a better knowledge of the industry so that we can be better consultants to our clients and to the CSIA organization as well. So as Colin mentioned, I'm a shareholder at the firm and in charge of the industrial automation segment. My colleague Brian Prozik, as he mentioned, is a manager. He's the manager in charge of the segment, doing R&D as well as some other stuff. He's going to be kind of moderating this. If there's questions that anyone's got, feel free. This is going to be interactive a little bit. I know the last time we did one originally on PPP loans, there was a lot of interaction and questions. So we'd like to keep that. We have slides that we'll go through, but I know as a business owner myself, I know that, trying to keep business owners engaged, we can't get into the trees and too much, so we want to keep this at a high level and really kind of maybe answer some of the questions that people are seeing or what people are doing to help grow their business, because there's been a lot of changes that are going on and still unknowns on some of the stuff out there. So with that, we'll kind of get going. But first, a little bit of good news. I mean, it's still mind-boggling in some ways to myself, but so the first good news is we heard last week that there was $2.5 million job increase in May, and unemployment dropped to about 13.3%, which I don't think anybody predicted that. I've heard some different things of whether or not those are right numbers, but when you take a step back and you think about it, with everybody going on to unemployment, now maybe utilizing PPP loans differently, people are going to start coming back slowly. And as everyone said, this could be just a temporary decrease in unemployment, and hopefully the supply chain and everybody else can start helping get that up. The next thing that also is, the Dow Jones is almost back to its, pre-pandemic levels. And I guess, yesterday, NASDAQ got over 10,000, which is the highest it's ever been. So again, you can see especially with the NASDAQ, it's a lot of the technology stocks that are part of NASDAQ. And therefore, some of those companies that are part of it are doing very well. And you're having some big bumps now in some of the airline stocks and oil and different things. So, for the system integrator industry as well, hopefully that helps with potential new business for some of those suppliers out there. So where are we now, right? Where are we currently? So we're still discussing PPP loans, right? So with respect to that, you have the two different variables of how people are going to be looking at PPP loans. One is all the ones that are under 2 million in loan value, which don't have to be certified. We're still trying to figure out what the SBA is going to do and what the banks are going to require for documentation. But everything that we've heard is basically that for the ones that don't have to be certified, you're probably going to provide the same type of information that you did to get the loan. Trying to payroll records, on the rent and other types of stuff, you're probably going to have to provide checks or invoices that show the payment amounts. For the over $2 million in value, I think we still definitely don't know. It's going to be some of the same thing, but maybe, maybe a little bit more stuff to tie everything out. The one thing that has changed a little bit is that they provided a little more guidance that allows, for a modified accrual accounting concept. And really what that means is just something that before it was like you had this paid and incurred concept. And really if it's incurred in a period that covers your 8-week period. Now we're going to talk about some of the flexibility, but before in the 8-week period, but you paid it outside of the 8-week period, it is allowed in that period without having to run a special payroll. So before I move on to the next one, Brian, any questions or things that people are wondering?
Yeah, I think there's some, and I think you and I have both run across this with different integrators that we work with, but the certification, the $2 million certification limit helped with some of the concern, but I know there's a lot of concern out there in the integration community about, hey, I got a PPP loan, or I'm considering applying for one, but I don't need the cash right now. I'm good as far as cash flow, and you're actually maybe even still getting some orders from customers and things like that. But then the concern being 12 to 18 months from now, when the orders you should have been taking now would be hitting the P&L. And I guess any recommendations to integrators that are kind of in that position?
Yeah, I mean, I think when we've looked at our clients, there's as you mentioned, under 2 million now, there's no certification, and I think the over 2 million, if you receive the PPP loan before May 4th, you don't really have to have any specific reasons of why you needed it. At that point in time, there was uncertainty right at the start with everything. You didn't know anything. So that's kind of what's covered. I think the people that are, that maybe received a PPP loan after May 4th may have to look at it, but I still think that there's uncertainty. There's always uncertainty, in my opinion, in this system integrator industry, because most of the stuff is project based, and you're still focused on your customers. So if your customers decide in 6 months that they need to put a hold on something, they're not putting a hold on it now, but they might put a hold on it in 6 months. That doesn't mean that there isn't uncertainty. So I think there's ways to document it, and specifically, what we've done with a lot of our clients is just put a quick memo together that kind of lays out some of the specifics that might be in there. And if people have questions about what that memo should look like, we'd feel free to reach out to us, and we could discuss kind of what we're seeing.
And I know you're going to get into it a little bit here, but I mean, it definitely brings cash planning and cash forecasting into a bigger perspective. I know a lot of companies dusted off the 13-week cash flow when the pandemic hit. Probably haven't used it much since the last economic downturn, but now you need to even look on a longer term horizon, so that you have enough cash available to take advantage of some of the opportunities that are going to be on the other side of this pandemic. So, okay.
Yeah, I think, and we'll talk a little bit more about it, but yeah, I mean, the cash planning is a big thing, and everyone talks about a 13-week or a projection. In this industry, based off of how, unless you're just all time and material and can really project it, you have to dive deeper into it. So there's a lot more opportunities and more thinking that might need to be done, and taking that step back and going, okay, what else could we do, or how do we get a step ahead of our competitors? And I think that's, the one thing that we're trying to bring a practical understanding to this CSIA community by talking about it in a light that isn't so tactical. So.
Okay.
So a little bit more on some of the detail of the loan forgiveness, because this is where everyone's kind of going to. A lot of the people are at that 8-week period, and as we get into the next couple slides, we'll talk about some of the changes in the flexibility. But the interim final rule on the loan forgiveness, did make guidance and provided the loan application law. So now we have that application out there. They did clarify some stuff, that bonuses and hazard pay can be included, but it can't be, you still can't have any one employee make more than, $15,385 in that 8-week period. There's no clarification given on the 100,000 annualized for one single pay period. We think that you could, if you didn't have owners decided not to take a salary, or you adjusted something, you should be able to show that during the 8-week period, you still only had 15,835. And I think right now, as we continue to go through it, I think it's still going to be at 15,385, even with the extension of the 24 weeks. That's the most any one person can have forgiven. Again, on the big other item on forgiveness was full-time equivalents. How do we look at safe harbor items, restoration, kind of how's it being defined, right? There allows for an exemption related to employees fired for cause or voluntary resignations, kind of in that decline to be rehired. So, if somebody, you wanted to bring them back and they said no because of COVID reasons or other things, that's not going to go against you on calculation for loan forgiveness. So there's just some documentation you want to make sure that you are doing to make sure that we have it covered, so that we're not doing that. And then the employee fired for cause, if there was some major cause that you have a drug policy and they failed the drug policy, that would be a reason for cause. So those are things that need to be documented, and then will be, kind of exempted out in that. It also then defines how we determine a full-time equivalent, right? And it says basically it's moving it up to a 40-hour week. So if you work 40 hours, it's one person, but if you have fewer than that, they use a simplified method that allows for half of an employee who worked fewer than 40 hours. And then on the loan forgiveness, the non-payroll cost, I think they defined a little bit more. There's no prepayments on the mortgage interest allowed, but there is some flexibility on rent and utilities, and especially going to get a little bit more on there during that 24-week period from the 8-week period. So, and then there will be some loan forgiveness reductions on there, and that's just, how it's now being calculated with respect to the full-time equivalent. So it made it a little bit easier as well. Any other questions, Brian, right now, or?
No, nothing yet here.
Okay. So just getting a little bit into the new Flexibility Act that just recently got passed, right? So one of the biggest things that it did, and this one's a little bit confusing to a lot of people, but it reduced the payroll cost down from 75% to 60%. So some of these, and really when I think about the system integration industry and my clients, the 75% payroll cost didn't ever seem to be the issue. It seemed like we were going to be closer to 80 to 90% of payroll costs and only about 10 to 20% of non-payroll costs, meaning the mortgage interest, rents and utilities, things like that, just because there wasn't a large amount of that. Where I see this coming into play a lot more is kind of maybe in the retail industry or the food and beverage industry, the bars and restaurants, where they got to pay rents, but nobody's coming back to work, and they may not bring people back until 50%, and your overhead costs really are a lot higher than your wages, because potentially in that industry that overhead of location could cost you a lot more money. And I think that's where they made some flexibility. They also extended the cover period from 8 to 24 weeks. And really what that was trying to do, right, is again, taking a step back and looking at ultimately what was supposed to happen in this for what they were doing with the PPP. Originally, they tried to say, get this loan, keep your people on. But then as people were looking at it, stuff was still, a lot of our system integrators were still going gangbusters, maybe the first 4 weeks, because stuff could still get done. Well, now the next 4 weeks, they've shut off the spigot. So maybe trying to figure out and laying some people off or doing some sort of work share program so that the supply chain can continue to get up and running again. And therefore, the 24 weeks will allow that, that to be able to be utilized. And, still with the work share programs, one of the nice things about it is right now through July 31st, you still have the $600 federal amount that you're getting for unemployment. And if you're doing a work share and you're working, 2.5 days instead of 5, you still are unemployed for 2.5 days. So you're going to get your unemployment cost from the state that the state gives for those 2.5 days, but you'll also get the federal $600. So it can be a huge opportunity to really save some cost internally, but keep your people still on. And I think I'll get into that a little bit more. But those are some of the things that you're kind of looking at when you have with the extension of this. So I think it's an opportunity to really look at, and as we'll get into the cash flow stuff, but really look at some of that cash flow stuff.
It also, Tim, with the 24 weeks there, that's optional, right? Like if you're, it was intended to help companies who might not have been able to fully utilize this loan. But for some of the system integrators out there, like you said, that business kind of kept up and they were continuing to move, they may not necessarily want to go for the full 24 weeks, correct?
Correct. But if it's going to allow them to get fully forgiven, they may extend it. So I have one client right now that in the 8-week period, they got about a $600,000 loan, and they were able to use about 520. So there'd be 80,000 that would be a loan I think they're going to extend it another, week or two to get the other 80. But the one thing that I still don't know exactly, I know that you can apply for the loan under the 8-week period. I think you're going to be able to apply once you've used it. So in a 10-week period, you'll start applying for it so that you can get that loan forgiveness. Now, as we get down, you can see that we put in here, it extends the payroll tax deferral as well. So the one thing that you got to be careful of is that when do you want to apply for the loan forgiveness? Because once you apply for the loan forgiveness and you get forgiven, you no longer can take the payroll tax deferral. So again, when we're looking at cash flow, it might be an opportunity that just says, okay, I'm going to spend it within the 24-week period, but I'm going to wait until the latest date I can to apply for this forgiveness. So another thing of saying, oh, maybe I had to take a step back and think about what I have to do. And then it gave, again, it gives that borrows until December 31st now to potentially rehire. Before it was the June 30th time. So now you have some flexibility on that as well. And then, they increased the loan term from 2 years to 5 years. So again, and my understanding is it's still at 1%. You don't start paying it until, well, they had it, I think before you'd pay it in you start paying it starting January 1st. But now with the 5 years, if you did get a big loan, let's say it was, $3-4 million, it could be an opportunity that, yeah, you had to lay people off, you couldn't bring everybody back, and you didn't spend $2 million of it, but now you got $2 million of, in theory, working capital that you get to pay off over a 5-year period. So it can be an opportunity for some cash savings and going from there. So
okay. A question just came in that can you extend for less than 24 weeks? Will you need to maintain or rehire the previous employment level beyond the 8 weeks if we choose to go for more than 8 weeks?
All right. So read that one more time.
Yeah. So with regard to the extension from 8 to 24 weeks, can you pick a period in between the 8 and 24? And then would you need to maintain or rehire the previous levels? If you extended it to say 10 weeks, would you need to maintain or rehire your staffing at that extended period of say 10 weeks? Would you have to maintain all the other criteria that limit the reduction in forgiveness? So the head count, the salaries, things like that.
Yeah, I think the way that I understand it, when you would apply for the forgiveness, you may wait, even though you spend it in the 10 weeks, you may wait to apply for the forgiveness up until December 31st, so that maybe that's the time frame that you had rehired enough people to get the full forgiveness. I'm not sure that there's been exact clarification, but that would be the interpretation that I would have on that.
Okay.
All right. So the next slide. So payroll tax credits and deferrals. A couple additional things that we see that are out there, right, is if you didn't take advantage of the PPP loan, just wasn't sure what was going on. There is an employee retention credit out there. That's a refundable tax credit against your employer portion of Social Security, and it's a maximum of $5,000 per employee, meaning that if you spend $10,000 on an employee during a period of time, you can get $5,000 back. The other one that's out there as well, that we talked briefly about is the payroll tax deferral. And this just defers the employer's share of Social Security up through the time your loan forgiveness has happened, or to, I think, December 31st, 2020. And then you would pay the balance there. Right now I'm seeing most of the payroll companies are kind of keeping the track of this as well on their clients. And so you'd have 2 installment payments in 2021 and 2022. And this is basically an interest, free loan. The bigger your, potentially the bigger your PPP loan is, the bigger this payroll tax deferral could be. All right. So one of the other programs out there that hasn't got a whole lot of publicity before and starting to now is this Main Street Lending Program. And, again, taking a step back and kind of looking at options, this Main Street Lending Program you can have this as well as the PPP loan. So this is giving you an option of potentially going out there and getting some additional working capital that's backed by the government rather than having the banks do it, right? And so the banks are still going to do this, but they've lowered the minimum loan size from 500 to 250. They extended the loan terms from 4 years to 5 years. The maximum value of between 35 million to 300 million. And that's calculated based off of the next thing. It's capped based on outstanding credit and adjusted EBITDA. So, and it's based off of 2019's adjusted EBITDA. And so if, for example, you had, I think I don't have it in front of me. If you had $1 million of EBITDA, I think you can get like 3 times that amount. So you'd be able to get, I think it was 4 times debt to EBITDA. So it's your outstanding credit adjusted to the EBITDA. So if you didn't have any credit outstanding and you had $1 million EBITDA, you could have 4 times that amount. If you were over, I think 25 million in revenue, I think it potentially could get to 6 times. So it has an opportunity to really be, and I think I'll talk a little bit more in some of the cash planning type stuff. If you have what we've been hearing in the industry, especially in Michigan, we happen to be in Michigan, right? And we deal with a lot of automotive. Some of the automotive companies, as you're bidding on new jobs, they want terms of basically 90-10, 90 upon kind of PPAP and 10% on after commissioning and installing and all that other stuff. And what we're finding, I've heard from some people, is that Canada right now, some of the Canadian system integrators are being able to be more aggressive because their government they can get loans like that. They've always had it. Well, now this Main Street Lending Program allows you to potentially get this line of credit. And when we said it extended terms from 4 to 5 years, the great thing is you have 2 years that you don't have to pay principal on, right? So if you can get a couple $1 million, you may be able to be more aggressive on these projects. And the other thing about it too is even from a gross profit margin, let's say you're used to 30%, but now maybe you take it at 20%. But remember, most of the CSIA community can get research and development credits, and you can offset your tax liability with that amount. So, take for example, a company that made $1 million but wasn't taking advantage of research credits. They're going to pay $300,000 in taxes. So they only have $700,000 of cash flow. A company that now instead only made, let's say, $900,000, but takes advantage of research credits, they're only going to pay about $75,000 in taxes. So they've now got $825,000 of cash flow. That's still $125,000 more of cash flow, and you're not having to pay any principal on this. You're paying interest, so you could pay down principal or other things. So these are programs that, as you're thinking about it, of, oh, I always say, well, woe is me, I can't get any projects because I can't afford to do this. This is an opportunity that says, oh, maybe I could be more aggressive on some stuff. Maybe I need to look at this. Maybe this might make some sense for me, and really kind of look at it and see if there's opportunities. So where do we go from here? So the things that a lot of my clients have been doing, right, is really trying to put business projections together for the next 12 months. And it's a changing dynamic every day, because we don't know what exactly is going to happen, right? We got current projects, and some of those have been put on hold. Some of those, because we have, availability, we might be overrunning on some of them because we don't have the backlog. Well, all right. So do we need to be being a little more aggressive on looking at, like what we talked about, work share programs or temporary layoffs? The biggest thing we continue to hear in the CSIA community is talent retention. And so how do you do some of those things? We'll get into a little bit more on a couple things, but we'll go from there. I see someone raised their hand. Is there a question?
I see the hand raised. Yeah, Richard, did you have a question?
I think Colin allowed you to take yourself off of mute and be able to ask.
Yeah, do you want me to do that?
It looks like he took him off of mute.
Yep.
Yeah, Richard, you're free to talk.
All right. Well, Richard, if you have a question and you want to just type it in the Q&A as well, we'd be happy to answer it that way. Looks like maybe we're having a little technical difficulty, but the next thing that kind of we were talking about was backlog, right? What does the backlog look like? How can we get there? And what do we need to do? And again, when we look at backlog, it comes with some of the quoting. So what are we doing from quoting? How can we be more aggressive? And as I just talked about before, looking at other avenues that you have, either utilizing your current cash flow to be a little more aggressive on quoting. Can you go out and get some lending at some low interest rates right now that makes some sense? So trying to utilize that quoting, on, to create some of that backlog. And we talked a little bit about employee retention. What do you do to make sure you're not losing your people? But is this an opportunity to upgrade? Everybody always talks about, you got to make sure you have A players. Well, this is a time that potentially is there, if we've gone through a pandemic and you don't want to lay people off, but the thing that I always take that step back as well as an owner of a business is I have to make sure that we're successful, and my employees, a lot of times the ones that aren't helping or doing different things, either something's going on or they're stuck in the wrong position, or it's just not the right fit for them at the organization. So you really, and are they causing potentially too much disruption to the other A players. You know, we're supposed to spend, 80% of our time with the A players and 20% with the other players. And I think sometimes it gets back to the other way around. You're spending 20% or on the good people, and you really need to be getting them so they're more excited. Your ramp up time, right? Again, we talked about this related, especially with the automotive. Getting a supply chain up and running through the system is tough, right? If you're at the bottom of the supply chain and you got to get inventory in or different things, you got to get that, and then you have to take it to the next step, and then to the next step, and the next step. So when are we going to be able to ramp up and be in full capacity? And especially even with COVID going on, you can't get plants up and running fully to a full extent. So if you're building multiple lines or doing other things, they might only take one of those lines right now. So and say, okay, hold on to that other line, even though you had everything done. And that's where you're going to make your profit, is on that second or third line that you had, or the panel that you were building, similar to putting into a second plant. And then really understanding your cash flow. I know Brian talked about the 13-week cash flow and maybe even a 6-month cash flow, but customers, really looking at your key customers and have they shifted their payment terms? Do you have the most outstanding with this one firm that decided it used to pay 30 days and now it's paying 90 days? So what is that going to do to your cash flow? We can easily do a 13-week cash flow based off of what everything used to be, but you really got to take that step back and think about, okay, is there going to be changes in when I get paid, or how I get paid, or what's going on? But trying to look at, is there discounts that you can take? Is there other things that you can give to customers because your margins are still okay, or other things to get them to pay earlier? Or maybe it's, you call it something different right now. Give them a little bit of advantage pricing, not to try to set the tone that they always are going to get this discount, but during this time frame, we want to be a key supplier to you. We're going to give you a little bit better advantage pricing during this time to make it happen. So you got, as business owners, your customers, right? And that's those relationships you built over the years. That's where using that to help you manage your business the best is what's really going to be the key. Some cash flow opportunities, some additional ones. We talked earlier about generating R&D credits. They can be used to be carried back. So for example, a lot of, I'll give an example in a minute, I guess. Convert to cash basis if you're under 25 million. A lot of system integrators can potentially be, if they're doing time and material and some other, you can be on a modified cash basis, where you could take a lot of the projects that have already out there, that are done and finished, or you had time and material type things. Those could be on a cash basis, and you could create potentially some cash losses that now allow you to be able to carry back NOLs 5 years, which you could create and utilize against higher dollar stuff. If you were a C Corp, you could go against 34% rates and it's now 21. If you were individual, it's now with the pass-through income, it was 30%, and before it was about 37%. So there's some cash savings by being able to carry it back. When I talk about the R&D credits as well, is if you created a loss, or had a loss, let's just say in 18, or in 19, but you had R&D credits, that you could generate in 19, you could potentially use those to carry back against income that you had in 18. The same thing could happen for 2020. If you had a really good year in 2019, you can start looking at projections. 2019, you made a bunch of money, you had credits, you utilized them, but there was still some tax that you paid. Well, in 2020, if you can generate those credits still, because you're still doing projects, you just might not be doing them to the extent, or you're not making as much money, you could still generate those credits and carry them back to get money back. And if you're a pass-through entity, those credits also offset your wages, the tax that you pay on your wages. So I think it's an opportunity there. Also, if you're looking at purchasing equipment, right now might be the time, because there's low interest rates, and you can take advantage of bonus depreciation to potentially create some losses and then carry back and get some cash back. And with these low interest rates, right, you might be paying monthly payments of $10,000 or something like that, and all of a sudden you can create a $200,000-$300,000 loss, and you can get $100,000 back from years in the past, 5 years back, because you may have paid a lot more. Perform cost segregation studies on your owner-occupied buildings. This is another depreciation type item that's a timing difference that could be an opportunity. So, those are some of the cash flow opportunities we're seeing that then would get put into your projections to really try to make you look at, okay, where am I really at? How can I, what types of things can I do to still try to grow my business? And then a few other opportunities that we're seeing, and then we can open it up for questions, as we'll have about 10 minutes left. There's been some discussion about maybe a work share program between system integrators. There's some out there that are really going gangbusters, and some that don't have the work, but potentially trying to, work share a little bit, so that there's no recruiting costs, different things. This could be a temporary jump. And how do you then, utilize someone else's talent that maybe you pay a fee for, but you're still not having to have all the overhead, paying recruiters, trying to bring someone else onboarding. So just depending on temporary type stuff. I know for example, one of my clients was, and now it's done, but had some work on ventilators. So they ramped up and had to get some stuff done much quicker. So, there's a lot of you guys that are in peer groups, maybe utilizing those peer groups to help with some of that stuff. Going after industries that haven't used automation in the past, right? I've heard the garment industry, really hasn't used automation in the past. Is it an area that, okay, how do I get in, or how do I find out a little bit more about that? And how can we put systems into place that might help these companies so that they can continue to work in the future if there's another, COVID pandemic, or if we have a second wave, right? If you had automation going on, a lot more of it, you potentially can push a button and really have 2 or 3 people at the plant rather than 20 people. There's potentially some M&A opportunities out there, or joint venture opportunities that might make some sense if you haven't, if you were thinking about it. What is out there? Those are, and especially you could potentially even use that Main Street lending program to get cash to be able to pay for an M&A deal, rather than having to go through an SBA or trying to figure out how you do a seller note or other things. So there's opportunities that are out there that if you're still doing great, it could be awesome. But one of the bigger things too that we've seen a little bit, we talked about talent retention, equity compensations maybe for some of your key employees. So putting in a schedule where over the next 5 years, maybe they take, 5 to 10% of the ownership, but it's vesting or different things like that. So you don't have to increase their salary so significantly, but you give them a little bit of buy-in and really get them excited about the opportunities to help you grow as an owner as well. that one's always a tough one as well, because it's, having more partners, there's more say and different things like that. So it's how you want to look at it, but it's an opportunity that's out there. And, if you have a very successful business, we've seen some opportunities this year to do some estate and gift planning, where we would, create some trust to the kids or grandkids that get put in, that are, stock of the company, that take money out of my estate and moving it into the kids or grandkids. And you can put different caveats on how they could use it or different things like that. But if there is opportunities for that, where potentially there's a sale down the horizon that could be fairly successful, and you might have an estate plan, estate tax in the future, this is something to think about. And also thinking about, come November, we may have a change in politics, where we now have a Democratic president, and that Democratic president reduces the estate taxes because they need to collect taxes on the wealthy. And if you do this before that happens, your exemption limit is at that, basically with the spouse, is at about a $22 million limit, where it could go back down to 5 million or something like that. Who knows? So those are kind of the things that we're seeing, opportunities that are out there. I don't know, Brian, if there's any questions.
No, I'm not seeing any new ones come through, but I definitely think, like on this slide here, the middle three items, really underscores the need for freeing up that cash flow and having available, access to cash, 6 to 12 months from now, because those types of things are going to come up, and you got to make sure you have the cash to go after them. Otherwise, you'll just kind of be stuck maintaining the status quo to some extent.
Well, we'll open it up for questions if anyone else has any. Otherwise, I think we're about 5 to 6 minutes before the hour, and we can let everyone get a few extra minutes back in their schedule today. Hopefully this was informative, and if there is any questions or follow-up, feel free to email myself or Brian, or reach out by phone. You can check out our website. We have some information out there related to some of the cash planning opportunities and loan assistance services that we're helping with.
All right, Colin, I guess hand it back over to you.
Sure thing. Well, I'd like to take this time to thank Brian and Tim for this informative discussion. I'd also like to thank all of those attending. I'd like to remind you that a recording of this will be available shortly. That'll be in the webinar archive section on the CSIA page. And please take a look at some of the upcoming webinars. We will be having a topic on digitalization post-COVID-19 with Sam Hoff, and Exotech will be doing a webinar on June 23rd. And there are a few other ones that we have coming up in July as well. So if you'd like to take a look and see what suits your interest, please feel free to. And with that, that concludes our program for today. Thank you, Tim. Thank you, Brian. And thanks all that joined.
Thank you, Colin.
All right. Thanks, guys.